The world's biggest tech giants, Oracle, Nvidia, Microsoft, AMD, Broadcom, Amazon, are circling a single table. In the middle sits Sam Altman, betting not millions, not billions, but $1.4 trillion on the future of AI. His company's revenue is a mere 20 billion. Is this genius or insanity? And what happens if the chips run out? Over the past few months, Sam Altman, the relentless CEO of OpenAI, has embarked on a deal-making spree, inking multi-billion-dollar agreements with industry titans. The numbers are so colossal, they sound more like governments than companies. $1.4 trillion in planned data center spending stretched over the coming years. This is for a company with projected 2025 revenue of just 20 billion, a nearly 70-fold gap that begs a critical question: what happens if OpenAI can't pay? OpenAI's CFO hinted, then walked back, that the US government could act as a backstop for some of these commitments, raising eyebrows across Silicon Valley. But Altman is crystal clear. If we screw up and can't fix it, we should fail, and the market, not the government, will deal with it if we are. This is high-stakes gambling on a planetary scale. For OpenAI to honor all these compute deals, its revenue would have to soar to an eye-watering 577 billion by 2029. That's roughly the size of Google's entire revenue today. A 900% increase from current projections. Experts warn that OpenAI won't or can't fully use every compute resource it's reserved. Many contracts are built with flexibility, milestone dependencies, and renegotiation clauses. If OpenAI falls short, partners like Oracle, Microsoft, and Amazon may renegotiate terms to salvage some business rather than none. These megadeals are complex beasts. Delays in power infrastructure, chip shortages, and supply chain hiccups could give OpenAI legal grounds to adjust commitments. And many headline figures reflect theoretical maximums rather than guaranteed payments. This makes the true financial exposure murky at best. Here's a paradox that defines Sam Altman's strategy. The man betting trillions does not have a personal equity stake in the company, nor will he, even after OpenAI's recent restructuring into a public benefit corporation. This means Altman can commit to billion-dollar contracts, knowing he won't personally bear losses if things go south. Instead, his personal investment is influence and vision rather than dollars. Altman, obsessed with the mathematics of scaling, advocates scale it up and see what happens. To him, throwing massive compute resources at AI models early, sometimes before the technology or market fully demand, it is the only way to maintain a lead in the race for artificial general intelligence, or AGI. Analysts highlight the unique risk dynamics. He can commit to $1 trillion, 10 trillion, or 100 trillion. Either he uses it, renegotiates, or walks away with minimal personal cost, says industry observers. The stakes for the industry. Altman's gambles don't just affect OpenAI, they create ripples that cascade across Silicon Valley and beyond. When OpenAI announced a $38 billion cloud computing deal with Amazon, the company's stock jumped 4%, adding billions to Jeff Bezos' net worth in a single day. Deals with Nvidia, AMD, Broadcom, and Oracle similarly bolstered their valuations. But what happens if OpenAI falters? Microsoft, which owns a 27% stake after the for-profit restructuring, has invested heavily $11.6 billion out of a $13 billion commitment, and OpenAI is set to purchase $250 billion in Azure cloud services from them. If OpenAI were to collapse, major debt holders and investors like JP Morgan, Citi, Goldman Sachs, and Morgan Stanley stand to get paid first. Common shareholders, including OpenAI's non-profit arm and employees, would be last in line, likely receiving little to nothing if things go south. Why place bets of this magnitude without personal financial exposure? For Altman, AGI, an AI system that surpasses human intelligence, represents an existential technological leap. The stakes couldn't be higher, and acquiring the compute and infrastructure early is his race car on that track. The scaling laws of AI indicate that more compute equals smarter AI. Altman believes first-mover advantage in compute resources will determine who dominates the next phase of technological revolution. He's also playing a careful game of influence. By securing massive deals, he positions OpenAI as the hub in a vast network of interdependent tech giants, binding them in mutual financial and technological interests to the AI revolution. But this setup raises corporate governance concerns. Altman's lack of financial stake invites questions about accountability. Experts warn about the dangers of idiosyncratic leadership when founders can take huge risks without direct financial consequences. In academia, this is called a moral hazard, and it roils investor confidence, who picks up the tab if the gamble goes wrong. Altman's next moves will involve balancing aggressive scaling with plausible paths to revenue growth. Products in development range from AI-powered consumer devices to robotics and enterprise solutions. He has openly discussed an IPO as a way to raise capital and reduce funding costs. If OpenAI succeeds, the trillion-dollar bets might look like the bargain of a century. If it fails, it risks triggering financial shocks for multiple megacorporations intertwined in its fate. Sam Altman is no ordinary CEO. He's a gambler playing with colossal stakes, wielding influence like chips on a high-stakes table where the entire tech industry has a seat. His bets will shape not just a company, but the future of intelligence as we know it. Whether as visionary or risk-taker, only time will tell if the house ultimately wins. But one thing is certain, the world is watching every move of Sam Altman, the gambler.